The Hedgeless Horseman here again. It's July the 10th, 2023. I didn't have time to cover any news in the last video because it already was up to, I think, over an hour. So I'll do another one instead. Some of the recent news, some came out recently, some came out while I was on vacation, and I probably missed some of the news. Anyway, this was today. Eskay Mining sells 5 mining claims to Snowline Resources for 4 million. Eskay retains 2% net smelter returns royalty in the claims. Snowline can purchase 50% of the royalty at any time for 2 million. Eskay will not be required to pay any road use fees to Snowline for its use of the Eskay road for the 5-year period ending 2027. The company also wishes to announce that further to its press release of May 18, 2023, the Eskay exploration team is mobilized to the camp and is preparing for the 2023 exploration drilling season. So obviously, kinda like last field season was, potential for a quantum leap with them carpet bombing the trend, or focusing at least on the trend between Jeff and TV and Jeff North, etc. Unfortunately, the returns were not as good as we hoped. They hit sniffs, etc., but it did not end up becoming, proving up a multi-kilometer system in one field season. So it's like I don't fault the company for being ambitious and all of that, because obviously I don't remember exactly the market cap, but the Eskay market cap was a lot higher than today. So obviously the higher the market cap is, the more success you will need to significantly boost the value and price to value gap further. It's only a shame that the drill campaign last year didn't yield better results. So this year it's kind of a similar situation in the sense that there is potential for quantum leap. Not only are we starting off at a lower price, so there's more upside. I mean, if you're trading at 500 million, if you find something worth 500 million, that's a neutral event. But if you're starting off from 150 million and you find something, potentially worth 500 million or more, then all of a sudden there's obviously some upside potential. So the good thing is this obviously increases the coffers a bit. They get more cashed up. So, they could do more drilling this season without needing to raise money. Or if they actually do hit something good this field season, they can do some more drilling. There might not be an immediate need to go out and get more money. So I kind of like the fact that they're doing it somewhat on a shoestring budget, because now they're more testing the concepts with the new geophysics models. So either the geophysics, the new geophysics models from that expert whose name I forget. If they work, we should be getting answers, or positive answers from the drilling without needing to drill 5,000 meters per target, if you know what I mean. Maybe just a few holes will be enough to see if, hey, this target with this geophysical anomaly, if it's legit. If we hit something, then we can pretty much know that it's legit. So I don't think one would need. I think it would be a waste to, chase an anomaly with like 20-30 holes. I hope that it will be somewhat readily obvious if these models work. And even if they work, I don't expect to, that every single anomaly will be a hit or anything like that. But yeah, so I think this is a nice initiative. Obviously, they will get to keep 2% net smelter returns royalty as well. So, I mean, these claims are what I assume around Skina, the SK, or yeah, the old Eskay Creek mine, which now is up to, I think, over 5 million ounces AU equivalent. So, I mean, the NSR itself might be worth something in the future, of course, but I don't think that's something that the market, will really care about right now. No, I think that it's the drilling that will have to do the talking. So yeah, I would say Eskay Mining is a high risk, high reward store right now. I hope they will test a few targets with their anomalies, and the future will show us if what happens. Nobody knows what's going to happen. Nobody knows what's there. Nobody knows what they're going to hit. Is this a slam dunk, no-brainer, guaranteed win? Absolutely not. So I actually have absolutely no idea, what they will hit, if they will hit something. The interesting thing, though, is that if they just make one good, let's say, discovery hole in one of the geophysical anomalies, I mean, then you probably have proof of concept already. Then all of a sudden, I would say it revalues all the other targets that have been outlined as areas of interest via the geophysics. So it will be an interesting season. I have no idea if they will make a significant discovery or will be in the doldrums again. So yeah, I personally think that. One second. I personally think that this is simply a high risk, high reward story. That's why I have it included in the gambler portfolio. I think it's too much risk to have a. Personally, I think it's too much risk to have a massive position in right now. Of course, if they end up making a discovery, I mean, then you're always going to have regrets one way or another. If they actually make a discovery or more this field season, of course you'll never have owned enough shares, and vice versa. But nobody knows the future. We can only a strategy, I mean, is all about theoretical future scenarios. Doesn't help anyone to know what happened after it happened. Then the opportunity is gone. All we can do is try to guesstimate and appreciate what the risk is, what is the upside, what's the chance of success. The best thing, of course, is price. I mean, if almost nothing is priced in, then maybe no chance of success is priced in. In that case, a relatively small position can have a big impact if success means it's 5 to a 10 bagger. We know what the Eskay Creek mine was worth, several billions probably today. So I mean, I'll obviously be watching this closely, but I'm not piling in right now before I see. I mean, if they hit and kind of prove that the geophysics model work, I think everything will change overnight. But as always, it's up to each and every one, and I have no idea what the chance of success is. Maybe SK is cheap from a risk-reward basis. Maybe it's not. I honestly do not know. I just like this initiative. And again, that's, I think, a positive thing, and comes with the Mac, the CEO, who has significant skin in the game. So of course, while I may be on vacation, or people might be going to their regular jobs, the management teams of these juniors, they go to work. They try to create value, and I think this is a very good solution to not needing to dilute right now. So I mean, and again, this might prove to be really, really favorable for shareholders in case it becomes a success, because then you limited the dilution by working out this deal with Skina, and then if they hit, there won't be, you'll get to keep more of that success. Magna Mining intersects 6% nickel in additional footwall zone at Green Hill. It's funny, it's like, there's some bashers, let's say, or naysayers who, when Magna came out with those really impressive PGM results, which had some copper and nickel, people were complaining, or maybe not complaining, maybe bashing, who knows. It's like, oh, where's the nickel? That's the thing. They have different zones, and different zones are concentrated or hosts different concentrations of metals. This appears to be a quite nickel-rich zone. 6% nickel, I don't know, I don't remember exactly, but I think 1% nickel is around 4.5 grams per ton AU equivalent. If we say just round it to 5, that's 30 grams per ton AU equivalent, plus 5.8 grams per ton platinum, palladium, and gold, plus 2.2% copper. So that what the equivalent grade is in AU, I haven't actually punched it out, but I guess it's closer to 40 perhaps. Obviously a very, very high grade, and kind of a new zone, I was going to say. The thing is, I personally think that Magna is just still absurdly cheap. I think it's one of the most boring cases, in the sense that it's just such a no-brainer risk reward, really. There's headlines and headlines almost every week about strategic partnerships, big companies including car makers, doing deals on nickel projects, and we see more and more car makers actually, talking about the risks to nickel supply, and you see more articles about how dirty the Indonesian and Philippines perhaps nickel production is. So it's like, Magna is pretty much standalone. I think it is the most advanced nickel copper PGM junior in all of North America. They could be having, some kind of cash flow, I think, within like 6 months, maybe a bit more than that, but it's like still short term. I think they have almost 20 million in cash right now. So they could theoretically go straight into bulk sampling, perhaps without even needing to raise money, and then kind of organically grow, that they, make money or cover the expenses from the bulk sampling, and then just expand from there. So, there's a possibility that, at least for Green Hill, that there won't be much in terms of dilution before we actually get into free cash flow. And with some of the grades they're hitting, they've already said that, Magna's drilling has shown pretty much that the grades look higher than the block model suggested. And if you have very experienced Sudbury operators who did the same thing, like, 12 years ago or so, and made that nickel, Sudbury Focus Junior into the most successful stock on the TSX, you literally got the A-team that literally have done this before, and it's trading very cheap, I would say. And back then you didn't have the tailwinds of this, constant deal making, talk about shortages of nickel and the need to secure, class 1 nickel in tier 1 jurisdiction. So I just find it kind of amusing. It's like, I think this is still one of the absolute most no-brainer value plays out there, Magna is still the largest position in all the HODL portfolios I manage, I think, and that's despite the dip in price. So it kind of says how they're very concentrated towards Magna, because I simply think that unless nickel and PGMs in a tier 1 jurisdiction, if that's not worthless, if that doesn't become worthless, Magna almost by definition has to be cheap. And I don't think there might not be a better team to actually pull this off either. So I don't actually think the technical risk is that big. I mean, obviously, on paper you can have an asset, and forever you can have a value on paper. But when you actually try to get into production, that's when the rubber meets the road. So well, they kind of have to make it work. But again, I don't think one should be as nervous about this as one might be for other gold juniors with worse teams and don't have the exact experience, etc. I mean, this mine, I think it was mined for 70 years. So it's like, yeah, I think this will for sure. I think this will work. So I mean, yeah, that I don't think there's too much to say about Magna. I mean, they could pretty much have drilled blank holes, and I think Magna would be still be incredibly cheap because they have Shakespeare as well, which is feasibility stage. This is one of the juniors that I would be least surprised to be sitting at a nice profit in 1-2 years. I don't actually think it's a high risk, high reward story. I think it's a medium to low risk, high reward story, and those don't come around too often. But obviously with share price, that dictates sentiment, so people kinda since share price has gone down and lingered here a bit, I think people actually believe that the market is getting putting an efficient valuation on Magna. I don't think that's the case at all. I'm biased, of course. Western Alaska extends Water Pump Creek mineralization, step-out drilling. You can read the news release on their site. Holes with some good visuals. I mean, here's one incredibly thick, or two combined incredibly thick intercepts of mixed base metals, sulfide and oxides. So do I expect Western Alaska to put out some really good holes this year? Yeah, for sure I do. The big thing will obviously, and here you can see, I think this is, okay, yeah, these are from the last year's drilling, so you can kind of see the grades, etc., what might be there. 2 rigs are currently turning on the last hurrah target to the south, exploring for the fault offset of the water pump system. So that is what I think. Here the last hurrah target area starts. So 2 drill rigs are active there. I think, I mean personally, which basically what I've said before, this mineralization here, what's that like? Yeah, if you count all of this, maybe 500 meters or something. I think that's just shy of it being a no-brainer. You gotta develop this kind of stuff. But if the last hurrah target, if they hit at the last hurrah target, basically like Eskay Mining, that I mean, now there's right now there are 2 possible futures where this target is not the extension, or something else explains it or whatever, or this is the extension and this is the continuation of the CRD system. If they hit with just one hole, I mean, that kind of de-risks this entire target, and all of a sudden I think you can see here on the map, I assume it should probably would continue for quite some way, because I mean it should claw its way back all the way back to the source, which might be down here or something. So if they hit something here, even if we get visuals that yes, there is massive sulfides, there's sulfides there, I think the case will kind of change overnight, or the implied value of Western Alaska will change overnight, because in that case it looks, I would say, incredibly likely that they will be able to reach critical threshold for development success. Because if just this is like 200 meters, for example, I think that might be enough to, then you already have a mine kinda, and this might get much bigger. If you see in the presentations there, when they compare it to other CRD systems, I mean this is just the fringe of what this their land package might actually host in terms of CRD system. There might be multiple trends. Who knows, there might be some kind of mantos deposit, it might be a porphyry. We already know Illinois Creek has some copper gold and stuff like that. And that's, I think that must be several or a few at least kilometers away. So I think, which I've stated many times before, this might be a quantum leap year for Western Alaska, and given that I don't think it's pricing in too much. Yeah, 106 million Canadian. If they hit or get good visuals here, or I mean, if they make any other discovery, it doesn't really need to be last hurrah. If they find some other CRD finger or something like that, I simply think the likelihood of this being a high quality deposit that probably is going to get mined, I think that jumps significantly, and I don't think 106 million Canadian would be even, potentially close to what that could be worth, given the grades, and if they have a few million tons of this stuff. So I would not be that surprised if Western Alaska pulls a multi-bagger in the coming months. Is that a guarantee? Absolutely not. Goliath drills visible gold in holes over 1.5 kilometers and discovers new strongly mineralized 6.5 kilometer trend containing multiple shear zones, remains open, golden triangle. Yeah, okay, so I mean there as always, the Goliath news release is so meaty that it takes some time to appreciate everything in here. But I again, it's like, to make it, I was going to say just easy, okay, 77 cents per share, 65.5 million market cap. What kind of a mine is being priced in right now? What kind of chance of success of finding something worth, something that's mineable, a multi-million ounce gold system in underground British Columbia? I mean, I don't think 500 million would be bonkers if that's the case. Especially with the potential for really good economics. We won't have that on black and white obviously until they do a PEA or an even more advanced study, but some company or whatever, investors might figure out that that's going to come and they take a position, bid it up. So that's the thing, it's like, there's always a threat that if people front run the future before you do, you might get left off. That's why I don't really believe, or my experience is that when you know something, let's say, is cheap, but you think like, but I think I got time, people won't figure out how cheap this is yet. I mean, you might be right, but my biggest regrets are typically when it's like, it's obvious that it's cheap, but you get convinced, kind of like Magna after the dip, that's like, but the market doesn't see it, so I got plenty of time to get in, etc. Sometimes it works, sometimes it doesn't, and I feel more stupid, I feel incredibly stupid when something actually starts to revalue, and you knew kind of it was cheap, throughout all that time, but you thought you had time, let's say, until people cared. But you never know when people might care, and you never know when a news release might change everything. I mean, just the title, like, visible gold in multiple holes over 1.5 kilometers. New strongly mineralized 6.5 kilometer trend containing multiple shear zones, remains open, golden I mean, talk about, I mean, it started out with the shearbet zone, or shorebet zone. But now they have the Bonanza shear, and I think one of the ones that, where is this? Here, like the Golden Gate feeder zone. And here you can see, okay, visible gold in, I guess that is 11. Maybe it's this hole here and this hole there. And the red ones are planned for this year. And they expect, if I remember correctly, to put out a maiden resource in next year. And yeah, so they completed the green ones. They plan to do all the red ones here. So I think, I mean, in next year, I think I personally think there's a pretty good likelihood that they will have a multi-million ounce resource just from this picture here. And obviously, as they talk about, maybe this is not the one, or is it? Well, this is the, okay, Gold Swarm and Payday. I mean, I guess the important thing is, like, they might have multiple sure bet zones. That's pretty much it. So I think that today's price of 65.5 will look cheap based on this picture here by next year, if not sooner. Probably sooner. Well, I mean, I think it's too cheap now based on risk reward, but and that's here, sure bet discovery, and they have quite a few other targets. And like Quinton talks about, you know, the piano key thing, that the sure bet zone might be just one kind of flake or one part of a, you know, regional kind of block of, or I was going to say, of a, you know, a massive system, and that's been fragmented and moved around and all of that. So the sure bet zone that they're drilling right now might just be, yeah, I mean, all of this stuff, I mean, that got eroded, for example, and that's why it's looking like this. So who knows how many more of these zones and feeders, etc., there might be over this quite large land package. Here we got a 10-kilometer scale bar. You can see it's like, okay, they're finding high-grade gold all the way through here, and they have this, what's the ace in the hole target, which is southeast of shorebet discovery. So at the end of the day, do I think they will it just be the shorebet zone that is discovered within this land package, this absolutely massive land package? No, I think it's gonna, I mean, this is I would say probably a district scale opportunity. I think one could classify it as, especially given that there's quite a bit of smoke in other areas, and I doubt that, you know, what they're finding over here comes from the shorebet zone. Yeah, so it's like I think Goliath is for obvious reasons a good risk reward bet. Snowline Gold intersected 418.3 meters or 1.9 grams per ton. You can read this yourself. Obviously an absolute massive hole. 216 meters of 3.1 was included. I mean, if at Fort Knox, if they can mine 0.2 grams per ton in a, you know, similar system, what would 3 grams per ton be worth? Or I mean, what would the margins be when this actually becomes a mine? I mean, I don't know what the margins would be, but hey, if you make money on, let's say, 0.3 grams per ton ore, if you have 10 times the grade, especially at least over this 216 meter interval, that ought to be, I mean, all of that would by definition in that case be pure profits. So from I mean, it's very remote, it looks to be very large, but it's like, if this mine gets up and running one day, this should be an incredibly profitable operation, tier 1 profitability, I would think. And that's probably why B2 Gold has come over from Africa and actually invested in Snowline. Line 1 Metals, Headwater gold mine construction is 75% complete. Mine construction is 75% complete. There's some really nice pictures here. I was there in 2018, quite some time ago. I don't think almost anything of this was built then. Mine portal. I wonder if that's the mine portal I saw. But so obviously, I mean, yeah, I would love to go back there. But it's like, obviously, a bunch of stuff has happened, and this is pretty much becoming a mine. Market is quite pessimistic, it appears. I mean, it's not really pricing in that they will be able to put this into production and actually have produce free cash flow, because I think the 158 million Canadian that looks really cheap, given that this is almost a fully built gold mine with gold at around $2,000, and the grades. And I know some people who believe that the grades will actually that the drilled grades are underrepresenting the grade because I don't remember exactly the the thought behind it, but somewhere along the lines of like, because there's so many, you know, small super high grade veins. I mean, we're talking centimeter scale, and they go all over the place. So maybe you where you punch it with like the ore zone with a drill hole, I mean, that's just a tube, so you might be missing a bunch of small veins that are just around the pierce point of the drill hole, and they go into different directions, etc. That it's not the typical just a nice load gold sheet type zone where it's like, you know, like Goliath kinda, but rather that this is, you know, on a micro scale level, or a, you know, micro level. You got gold going all over the place, and if you don't pierce every single one of those, which you really can't, I guess, with a drill hole, there's gonna probably be more gold than you think. Because let's say, I mean, just an example, I don't know if this is accurate, but let's say you have a bouquet of veins. You have think of a flower bouquet and how it branches out, and you get veins going in, you know, on a micro scale going in different directions. You're not gonna hit all of those veins with one cylinder drill hole. You're gonna hit a few. You might miss one that goes, you know, have a different orientation and or splay offs just before the drill hole pierces it, for example. So the only way we're gonna know what the actual mine grade is obviously mining. So I think there is a chance that at least from the rationale I've heard, that the production grade might be higher than is suggested by drilling, and the drilling is already suggesting that this is a very high grade system. But it is a bit, I mean, unique, given that it's you know, narrow veins, but they mine that over at Vatakula. So I personally think that the market is too pessimistic, and I thought that one reason might be that the market expects another financing. But might have been the last news release where they stated, like, you know, fully financed, etc. So I think especially if the market is wrong about, if it assumes there would be another race before they get into production, if that's wrong, and the grades might be higher, well, that they make it work in the first place, and the grades are higher, yeah, I can see a pretty interesting 6 to 12 months for line 1 from this price level. First goal is expected in Q4 already. So yeah, within 6 months there might be a line 1 might have made a big leap, and like I wrote about in the piece I did quite recently on line 1, I mean, that's going to be one of those gatekeeping checkpoints. If they prove that they can mine, they can mine at a profit. I mean, I don't expect them to have the most efficient mining operation they could have, you know, in the first month or anything like that. But if it becomes obvious that, hey, they're able to mine this stuff, and maybe thanks to grades being higher or whatever, then all of a sudden it's like, yeah, then you have probably a profitable gold mine with, you know, let's say 10 years worth of production or something. I'm not 100% sure, but in an entire alkaline gold system caldera. So who knows how much gold might actually be there. But if they show proof of concept that yes, the Tuvalu deposit can be mined, I mean, the 500 zone, which is like bonanza and thick, that should be easily profitable. And I think as long as they get to that, I think that could pretty much throw off as much cash as the current market cap. But anyway, if they show that they can mine the stuff that's not necessarily the 500 zone with a profit, I think line 1 is just gonna, I think there might be a realization that just how cheap line 1 is in that case. And then potentially we're talking about a profitable gold producer which could be growing for the next decade or two, both metal endowment and production. And then we get into the K92 concept. I mean, K92 has just been an absolute beast. KNT, I think. Okay, it doesn't capture. Well, yeah, okay. So in that case, like I put in my last report, it's up to 1.48 billion now, but it was obviously way higher not too long ago. But then we might be around here, I think, for line 1. So this, I would say, was the great revaluation period for K92. It's like, okay, they can mine this with good margins, and it looks to be huge. So then the market started pricing in how good it looked. Yeah, then it looks like it's almost been consolidating ever since. But yeah, a big rise is what I would expect from line 1's market cap if they show that, hey, they can get this into profitable production sooner or later. Condor receives $1 million payment on Soledad project, US $1 million, so that's like, well, I don't know what, 1.5 million Canadian. It's not a big sum, but it's like the good thing about Pucamayos, for example. I mean, with 1.5 million Canadian in Peru, you could, I mean, with a kind of system they have, I mean, that's enough to finance the whole discovery phase, I would say. And they already have more money than that. I think they have a few millions in the bank actually now with the options and all of that. This is obviously, I mean, Condor's Pucamayos target is maybe by far the most interesting maiden drill campaign that I am aware of, at least in my holdings. I guess Inflection Resources is close because they don't have that discovery hole yet at Duck Creek, for example, and like Headwater will drill Midas North, for example, but neither of those two will get to keep, if successful, they will keep 25% funded to PFS plus royalties. But Condor still has, I think it's 80 or 100% of Pucamayos. I actually think that Ever Marquez, the geologist of this company, has a 20% interest, something like that. But the target is huge. The time from question to answer and will be perhaps some of the shortest timeline in the business, given how those kind of systems works, like Pierina, which got acquired for, I don't know, 1.5 billion after just 9 holes in a similar type high sulfidation epithermal system. Trigon granted permits to highly prospective high-grade silver ground in Morocco. This is their second ace up the sleeve. I think, what is the market cap right now? 34. This, to me, even though I'm not a geologist, I think Silver Hill, wait, one second. Oh, okay. I just, when I briefly skimmed this, I just assumed it was the continuation, or that they staked around the Silver Hill Pro. This actually appears to be a completely new set of targets. Well, it's a big target, at least. 25 visible veins with historical workings. Who knows? I mean, obviously this looks like a kind of a, I was gonna say, elephant targets. I mean, that's the nice thing about, you know, being where not too many companies are. Even though Morocco ranks, I think, #1 in all of Africa from on the Fraser's mining index. So incredibly good jurisdiction if you find something that could be, you know, could become a mine. So yeah, so this means that they have 3 kind of aces in the sleeve. If the combat mine works and they can ramp that up, 34 million Canadian will probably look super cheap, especially if copper Greece. I think the Silver Hill project in Morocco has company making potential, like serious company making potential. And this is, I guess, a bit more early stage. There's no real geophysics and all of that, but it's appears to be a pretty large target package. In a very good jurisdiction. And we know that Aya Gold and Silver, I think that's their name, they built that company into a powerhouse in Morocco, mining silver, lead, zinc type mineralization. Obviously, they have been able to, you know, build mines and do work. So yeah, I really like this. Obviously, since the sentiment is piss poor right now in the sector, and you could probably pick up stuff on the cheap, and with on the cheap, and perhaps with not too much competition. So I mean, if this ends up working, combat mine is obviously the main focus right now, but I really like this, to have 3, 1 soon to be hopefully a cash flowing copper mine, and that is expected to get better with time as they ramp up production and go underground and stuff like that. But they've had some good results. 9 meters of 7.9, for example. I mean, yes, that's just one hole, but here's like 76 meters, 1.48% copper. 22 meters from the planned east pit. I mean, yeah, that might not be huge in terms of ore, but with, you know, grades like that near surface, that's probably economic. I mean, obviously 7.9% copper is like should be obscenely economic, but if you don't have too much of that, that's like I'm you know what I mean. It's not like, yeah, oh, the whole deposit is 7.9%, but good signs. And yeah, I mean, I think Trigon is cheap, and of course it's one of those. If you knew the combat mine would work and they would get into a, you know, kind of ever increasing expansion, and copper would collaborate, then who knows? I mean, I wouldn't rule out a 10 bagger by any means. But that's not a guarantee, and that's not why we're in this business. If I knew there was a guarantee in any stock, and a guaranteed 5-bagger, I would be all in. I'm not all in on any stock. There are no such things as guarantee. We know what we're paying for something, and the less we pay for something, the less valuable it needs to become for a good return. Anyway, and now they have another kick at the can with the new project. De Grey announces increased investment in Novo Resources. So yeah, as you probably know, De Grey has taken a pretty big stake in Novo, and will give Novo, I think, around 10 million cash, Australian, 10 million Australian. So I mean, I know some people who believe that Novo will, that De Grey basically is eyeing Novo and would like to take that over. Importantly, Novo is keeping 51% of the Egina targets, where they, De Grey will be earning in or buying 49%. So Novo will be the head honcho there, which is good. Otherwise, who knows, De Grey might, I was going to say mothball it or something and don't do much, and to the chagrin of Novo. But Novo is the controlling joint venture partner of that project, which is good. And again, we know Novo has a mill, and De Grey has around 10 million ounces already. That seems perhaps to be a fit. If you have 10 million ounces, you don't have a mill. Novo doesn't have 10 million ounces but has a mill. You know where I'm going with this. It's going to be interesting to see what plays out there in the Pilbara. I mean, the Novo shares sure aren't pricing in too much. 60 million for the land package. Michael Spreadborough, the CEO, actually did the largest insider purchase he's done yet. No, actually bought 70. And it's just now that I realize how much, I was going to say Novo has fallen. I remember when I thought this was super cheap. Well, I actually remember when I thought there was no way that Novo would even go below $2. Now it's 1/10 of that. So yeah, 105,000 shares for $18,000. I mean, pretty sturdy buy after all. And yeah, we'll see what happens. Like with Novo's, like I know their land package is worth a lot. I know they have, 30 million or something in equities. They have, I don't know how much cash they have, but they do have liabilities with the mill and all of that. So it's a fascinating situation where it's like, at face value, Novo is just absurdly cheap, but the land package cost and there's liabilities with the mill, which means that the cash balance, etc., is just a snapshot. And of course, I mean, they're doing exploration work to increase the value. That's why you spend money. But the holding cost for the land, that's just, I mean, to kind of, you pay to retain value in terms of potential. But obviously that's a bit tough, given that right now we're at a sentiment low where nobody cares about banked success, let alone potential success. There's just a few stories where you get right now where people are okay to pay up for the actual potential. They don't even pay for what's already there in many cases, like Magna. But in a full-blown bull market, when deals and people would be looking for, who has the most amount of ground or whatever, and stuff like that. Yeah, Novo would do a lot better, I think, but we have to get there as well. And one thing also is that Azure, A-Z-U-R-E, Minerals, I think it's Minerals or Metals, they are the neighbors of Novo up near north of Comet Well, where Novo has their battery-focused ground. I think it's, what is it, south of Karatha, the town of Karatha. They have made some really good lithium. They hit some really good lithium hits. And yeah, I've seen a lot of people talk about, a lot of the lithium focused investors on Twitter talk about their significant results recently. And Novo has land right between Artemis and next to where they have hit pegmatites. What's going to happen with that ground, I don't know, but it for sure is good that Novo has been quite open with, hey, we're looking to monetize our battery metal portfolio. They've already done a deal, obviously, with what was the name of them? I don't remember, but for the ground with lithium potential in the Mosquito Creek Basin near Venus Creek. But this is another area to northwest near Karatha, where Azure has had really good lithium exploration success. So I would think that land package A is worth something and B could be monetized. So I would not be super surprised if they maybe get a deal done on that and can raise more money or do some joint venture or something. So yeah, I think Michael has some more deals up his sleeve, actually, helped by the recent success over at Azure, for example. Headwater Gold commences drilling on Mahogany. I think Headwater is just criminally undervalued. But I don't I mean, this is the best time to be an investor. Like, there's only one thing I need right now, and that's more money. And that's been the case for well over a year. I mean, I always invest, but now it's just a smorgasbord of cheap stuff. It's just, I mean, there's companies like this where it's like, I'm almost, 10,000% sure this is cheap. and that's without knowing that there's no guarantee for success, but it's like 15 million Canadian based on what they have. My opinion, I think it's absolutely, I personally think it's absolutely ridiculous. I own a pretty good chunk of this. But I'm not really in a rush for any of these stories to go higher. And that's why you typically won't see me, spamming the forums or just spamming away on Twitter. It's like, to get people to buy. It's like, hey, these prices we're seeing right now, you can wait 8 years to see similar prices. Meaning that it's like, there's probably never since 2015-16, or maybe actually last year, if we think that the last year was the bottom, like in Headwater's case, for example. Obviously 16 cents is lower than 30 cents. But given given how cheap it is still, so it's like, yeah, okay, this was probably, generationally cheap, but I think this is very, very extremely cheap. This is a luxury problem. There is absolutely truck ton of opportunity. I don't think, the returns I expect from my money invested in my average junior or average high quality junior that I follow or own, I think it's like around 300%. So in my mind, every money I can get to work on this, even though I don't know which case will actually be a big success or anything, and obviously 300% is just a risk-adjusted fair value estimate. In reality, they might go like, one goes 100%, one goes 600%, one goes minus 50%, and all of that. I just think that on average, adjusting for risk, etc., I think many of the juniors I follow, at least, I think they're, can easily see them go up a few hundreds of percent without saying that they're overvalued. That is not something I could say in the top of 2016. I could not say that at the top of 2020. Then you actually had to do a lot of due diligence and try to find the ones who were actually undervalued, perhaps extremely undervalued still. I mean, in 2016, almost nothing was really undervalued. It was very hard to find something where you think or were quite sure that you were underpaying for the assets and potential. Right now, there's a huge amount of stocks I think I could make money on, meaning that they're buys, but there's also a large amount of actually no-brainer buys. Like, again, it's like I wouldn't be surprised to be up 300%. And if you find 20, 30 of those stocks, you obviously don't need to. I mean, in when prices are high, when sentiment is high, if Headwater was at 70 cents or 80 cents or $1, and other juniors were up like price 2x higher than they are now, then you would really have to dig, I think, to find a company where you think, hey, I think this could go up 200-300% without being overvalued. Now, because this market sells everything at the kind of same time, because we're in total depressed mode, I think there's a bunch of them who have considerable upside potential. So you don't even need, I mean, again, if you want to have a portfolio with a expected future return of 300% at a sentiment high, you might find one stock that's that cheap, that nobody knows about, or something like that, or somebody, the market doesn't understand it, or stuff like that. And if you would want a portfolio to have that kind of expected return, you would need to go all in on that stock. Because let's say the 20 best cases you knew about in decreasing order would range from 50 to 150% expected return, and one is at 300%, the one that is under the radar. If you would want to have your portfolio to have an expected return of 300%, you would need to buy that. But in that case, that might still be a case of like there's a 30% chance that they make a success, meaning it's like 30% chance it becomes a 10-bagger, 70% chance it gets cut in half. Even though that has the highest expected value, highest expected return, that's still a high risk, high reward story. And I don't like the idea of having a 70% chance that your portfolio get cut in half. What was I going to say? And the flip side of that is a 30% chance of having a 10-bagger in your portfolio. Yes, there's a 30% chance you could get rich. I shouldn't say rich, but that you 10-bag your entire portfolio. But there's a 7% chance you cut your portfolio in half, and maybe more than that. And right now, for example, it wouldn't be too fun to have a 70% chance you own a junior, which you put all your money in. There's a 70% chance that they don't even have anything. And then the gold bull gets going in time for you to have cut your portfolio by half when everything has a high future expected return. So then obviously I would much rather go, if instead of putting everything into one story to get the absolute maximum expected return, but with a high risk, I much more like this environment where you could put money into 20 different stories, like my gambler portfolio, and maybe all of them have 300% expected return. I mean, the odds of 20 of those stories actually becoming failures, all of them, I think that's very, very low. Way less than 70% chance. So we're in the golden age of being a value investor, mining investor, because from these levels the returns are the highest, and the probability of making money as we go into the next sentiment high is incredibly high. Whereas if we were at a sentiment high, the expected returns over the next 2-3 years might be negative. You might be happy if you come out with minus 30%, like we've seen for the last 3 years. But from these levels, I don't know. I just think that's like 300% is going to be easy once this market turns around. So that's a wrap from me. Consider me biased as always, and take note from Brit Guy, for example. Comments by the HH tend to lean on the persuasive side, don't they? I try to keep mine neutral if you post it about stocks. Anyway, so it's like I might be full of shit, I might be totally wrong. You maybe should be following a neutral person like Brit Guy, quote. Anyway, that's my story and I'm sticking to it. But again, it's like I can't guarantee anything. I have no idea what any of these stocks I own will be next week, next month, next year. I think they're gonna vary wildly depending on what news comes out, depending on what sentiment does. I just think that on a long enough timeline, I don't think there's any way I'm going to lose, because I think my strategy makes total sense. And if you can buy stuff at these prices, obviously a success. I mean, if we were at a sentiment high and the junior hits blue sky over the next 2 years, that might go up 300%. If we go into a sentiment high from these sentiment levels within the next 2 years, and the company have blue sky success, it might be 1,000 to 1,500%. So the cheaper you start off with in the average holding of your portfolio, from these levels, one success might pay for 10 failures. Whereas if we started from a sentiment high, maybe it would pay for 2-3 failures. So we actually need less accuracy and all of that from these price levels, because they're so far away from pricing in the blue sky scenarios. So from a poker player's perspective, the hands right now are like pocket aces. See quite a few pocket aces, quite a few pocket kings, pocket jacks. Whereas at a sentiment high, you were stuck with, like, if you would be happy if you found a pair of tens, and most of the stuff would probably be like 7-8 offsuit or something like that. So now it's very easy to be investing because the margin of safety is so huge, and we need less accuracy. We need, the cheaper everything gets, the fewer, the lower the hit rate we actually need. And obviously the future expected returns on dry powder just goes up exponentially. So yeah, consider me biased. I own shares of all companies, I think, that I mentioned. I think quite a few are banner sponsors as well, which makes me twice biased. And again, come up to your own conclusions. This is how I think, and I think, I'm probably I gotta be biased in some way. I would be lying if I wasn't biased. So it's like, if something I say doesn't make sense, it might not make sense, or it might make sense to me, but it's like, you're the steward of your portfolio. If I have high conviction in a stock and know what I'm looking for in terms of news and what I expect happen and what I think would be a sell condition, etc. That's beneficial to me because then I actually have a strategy. But it's like if you don't have any idea or see anything that I see in a case, etc., you're probably going to end up making mistakes because you don't have any conviction. So only don't ever buy anything just because I'm bullish on it, or sell something because I'm bearish on it. You're the only one that has control over your portfolio at all times. You're the one that's going to end up making decisions. So the most important thing is that your decisions make sense and you have a coherent strategy. Because if I have a buy condition or whatever, and it's like, okay, you follow that, but it's like you have no idea what my sell condition is, or vice versa, then it's going to be hard, because then you only have half the picture, if that makes any sense. So it's like the number one responsibility, and why most of my videos are about investing, is that like I said before, I think the greatest gift I could give anyone, in a junior speculator or a junior investor, is not give a fish like a certain pick. Yeah, okay, if that works out well and you played it well, you'll make money. But it's much better, obviously, to be able to figure this sector out and be able to make money in this sector or any other sector that is tainted by high volatility and sentiment, which is almost every sector, especially the commodities, which are cyclical. That can serve you for life. And you don't need to watch my videos or anything like that. And who knows? I don't know when I'll be stop doing videos. So I would say it would suck too if you just thought that, hey, I'll just buy what he's buying and I don't care about anything else. Don't take the time and energy to learn anything. I mean, what are you gonna do the day I stop posting or something? Maybe I get hit by a truck or something, knock on wood. Then you don't even have the skills to continue. Then you have to actually go out and maybe try find some other person. I mean, there are a few people that are actually really good at investing, but a lot of them don't really talk or write that much, and the ones who typically talk and write the most are the worst ones. So that's kind of, yeah, it's not ideal. The best thing you can do for yourself, your family, and whatever is to learn yourself, and take the responsibility. Hold yourself accountable to, like, yeah, I gotta start to understand this. Because, and again, it's like one thing to remember to relieve some of the pressures. Like, you don't need to be perfect. I make tons of mistakes all the time. I have had many holdings go down 50% or more. I have lost money in a lot of stocks. I can't predict the future. That comes with the territory. Big losses comes with the territory. And like the last 3 years, we've been in a bear market. If you haven't been making money over the last 3 years, that doesn't mean you're a shit investor. If you're only down 50%, that might be outperforming majority of people, actually, especially if you're focused on gold and silver, because that's the kind of the two sectors that's been hit the hardest. If you're only in lithium, you would probably be up. But now, of course, I mean, what people typically do is they get into the hot sector in time for the that to keel over, and they sell the gold and silver sector right now because it hasn't quite worked. But that will of course change. So it's like lithium and some other stuff has been making a lot of money recently. The next big moves, personally, I think that's gonna be. I'm more heavily weighted towards gold and silver. But if you find something cheap in any commodity, or exactly, something cheap, that's like, hey, I mean, if lithium gets cut in half, but you think you have a new Patriot Battery Metals type story, and it's selling for 10-15 million, to not buy that just because you think lithium is closer to a bear market than a bull market, I think that, I mean, that doesn't make too much sense. And that's why, again, I don't try to guess where gold and silver or the metals will go. I mean, I have my thoughts on it, but I haven't bought or sell a company that I can remember because I had a idea where I think the metal prices are going in the short term or anything like that. Anyway, yeah, so again, for the fourth time, consider me biased. This is not investing advice. I'm not a geologist. I'm just a happy camper who likes to compound. Thanks for listening. Bye.